We're coming off a decade of underinvestment in other capacity outside of Indonesia, and we see now electric vehicles on the horizon and a big lump of demand that's coming from the EV story. I believe we're on the verge of a new super cycle coming in nickel sometime during the early to mid 2020s. This is a metal that people haven't had a chance to invest in very many ways. So, the more educated investors are, the better decisions we're going to make.
Hello and welcome to Crux Investor. We're here today with Mark Selby. He's the CEO of Canada Nickel Company. How are you, Mark?
I'm good, Matthew.
So you're in London?
Yes, with nickel being a metal that's on investors' mind, getting lots of
Very
attention.
Much so.
Yeah,
it very much is that. And what sort of people are you seeing, or what are the sorts of companies coming?
Well, it's been great. It's a full range of high net worth investors,
right?
Institutional funds, and then even corporates, who are looking for new projects to invest in. So
right. Okay. And just very quickly, give people an overview of what Canada Nickel is, because it's a relatively new company for you.
Yeah.
But not necessarily a new company.
Right. Yeah. No, we basically, we're advancing the Crawford Nickel project. It's a brand new discovery. Right. Nickel has very few new discoveries. And so it's very similar to a project called Dumont, which in my previous life at RNC Minerals, we advanced from a resource all the way to fully permitted, full feasibility study, construction ready project.
Right.
And I will be able to take all the learnings from Dumont and apply it to this deposit and advance it, we hope quite quickly.
Nice.
Yeah.
Nice. But we're not here to talk about that today.
No, we are not.
You have quite kindly said you'd give us a bit of time to understand the nickel market. Now, you've been in the nickel market a long time.
Yeah, no, I was head of market research at Inco in 2001.
Yeah.
And have continued to be a commentator on the nickel market now for nearly 20 years.
Right, okay. Now, and the reason I think it's quite important, because we're kind of starting a series where we're just helping people understand various commodities as they hit various points in the cycle.
Yeah.
So nickel is, complicated.
Yes.
Shall we say, right?
Yeah.
So why don't we talk about some of the
Sure.
background to that, maybe even from, a bit prior to 2001.
Yeah.
And then we'll get into some supply-demand type conversations.
Okay, so, that sounds great.
So when did you first got into it in 2001?
Yes.
What was it doing then?
Yeah, I literally joined Inco within a few days of the trough of the nickel price in October 2001. It hit about $2 a pound, or $4,400.
Right.
Yeah.
So the reason I ask is it's kind of interesting to see. People need to go through cycles to understand how commodities, and anything else, behaves.
Yes.
So you came in. That was a particularly interesting time.
Yeah.
Was that tough?
Oh, it was. Well, it was. I knew what I was getting into.
Right.
I would love to see that. I got into mining at that time because I saw the rise of China and that it was going to transform, metals demand, and we were going to go through a super cycle. But I quickly realized when I got in that role how important China was going to be. But I didn't know that. Going into the
at that point.
Yeah.
So you mentioned the phrase there, super cycles.
Yeah.
So it's a phrase quite commonly associated with nickel. Can you explain to people what that means and maybe examples of some of those super cycles?
Sure.
Yeah.
Nickel. Nickel is a metal that has always been more volatile than a number of the other base metals. Mm-hmm. It's big, but not very big relative to, say, copper and aluminum and zinc and so forth. The other part of it is there's some real structural issues in the market that have sort of come to bear over time. And so, if you go back in history, nickel, it has gotten to very high prices. So in the late 1960s, nickel got to the equivalent of $50 a pound in today's dollars.
Okay.
We went through another super cycle in the late 1980s, and again in the mid 2000s. So with EV and everything like that, and a decade of underinvestment and new supply, I think I believe we're on the verge of a new super cycle coming in nickel sometime during the early to mid 2020s.
So you mentioned another word there, volatility.
Yeah.
Right. So, but what has traditionally driven that volatility, and is it something that you see necessarily going forward? Because people talk about the EV revolution solving a lot of problems for a lot of companies, apparently.
Right. Yes.
So,
and cancer as well.
Absolutely.
Yeah.
So what's it going to do going forward? But let's start with where this volatility has happened and why in the past.
Yeah. No, I think for investors, that's one thing to pay attention to. We are going to go through some major swings as as we go in a sustained upturn,
Yeah.
but it's not going to be, it's definitely not going to be a straight line. The things that are specific to nickel that enhance that volatility is that historically stainless steel is the primary demand driver for nickel, and they have a pricing model that basically builds in the expectation of future price increases. So what happens is you get buying behavior throughout the chain where people anticipate prices going to go up. So they stop buying, and then when they think it's going to roll over, everybody puts their hands in their pockets, waits for the price to come back, and then comes back into to the market again. So and we've seen evidence of it already. This past year, nickel got to $18,000 a ton, $8 a pound in September. And as I said when we first talked, that by the end of the year, it's going to come off probably 15 or 20%. So
explain why.
Two reasons. One, as you get a new spike in nickel prices, two things happen. One, nickel pig iron production. Basically, the Chinese producers have a bunch of ore stockpiles, and they can turn that into cash at higher nickel prices. So they take advantage of those surge in prices. It's if I can make money making NPI, I will make NPI. And the other piece of it is the stainless steel scrap chain, which is a massive source of feed. And I would encourage people. Scrap is something that isn't talked about, but it is a huge factor in overall supply.
What is scrap precisely when you do this essentially? Right.
So scrap is a big component of stainless steel production. So for most of the stainless steel producers in the West, more than 2/3 of their feed is scrap material of nickel containing materials. Now it's not all exactly, it's not a bunch of stainless steel knives and forks.
Sure.
It's actually a blended box of material that scrap makers make to a specific specification.
From scrap yards.
Scrap yards, and they take 10 of this, 5 of that, 4 of that, 2 of that, 1 of that, put it in a container, and that container meets the specifications that have been agreed with that stainless steel supplier. But what the entire scrap chain does, is kind of put a little bit away, waiting for high prices to come. And when it hits their number, that scrap comes flooding into the market. So when we hit a price level this past fall that we haven't been to for 4 years, you basically have 4 years worth of people putting stuff in a corner that all comes out into the market.
Got it. So obviously nickel's come off in the last couple of weeks, 2-3 weeks, right? And you said that is possibly what you're saying the cause could be, or is?
Oh, it is, because when lots of scrap's available, then stainless steel companies don't need to buy primary nickel, and so that takes more demand out of the market. So you've had a big, and you've got more nickel pig iron in the market as the Chinese producers produce it.
So have you got a sort of sense of what the size of each of those is, the pig iron and the scrap, and how long is that going to affect the current pricing?
Yeah, I think next year is going to be sort of a tale of two halves.
Right.
It'll probably take us most of the first half of next year to get through that extra amount of scrap that's come into the market, and that extra amount of nickel pig iron. So I think prices could go another 10 to 15% lower from here. But once we work through that scrap, work through those ore stocks, and then we come out on the other side. And we, I think the prices start to move higher, because once that inventory's gone, it's gone. Right. So you end up with a big restocking phase that's happened as people have to come back out and say, okay, well, I don't have these stockpiles anymore. I need to go buy even more primary material.
Yeah. You talk about this of OPEC of nickel.
Yeah.
What does that actually mean? Who are the players?
Yes. So the key realization here, I think that people are going to have to in the nickel market is. Robert Friedland at the BMO conference called nickel the new gasoline, which I thought was a great phrase, and is reflects what is going to be happening as EVs move forward here. OPEC at its peak controlled about just over 50% of the market, and we remember all the things that countries and companies did to avoid that supply concentration. At that point in time, in the nickel market, Indonesia, the Philippines, and New Caledonia will control a very similar amount of global nickel supply, at that point in time. Those are 3 countries that have, intervened in the mining sector. Those are 3 countries that have, financial issues, revenue issues. So I think, the temptation for them to put some sort of export duty, some way to capture additional value for the country, is going to be just too tempting. And that will come in place, which again will make, nickel assets outside of those areas, much more attractive. Was oil, oil outside OPEC a good investment in 1971 or 72? That was a pretty good trade for a good 20 or 25 years. So I think I think it's going to create those kind of opportunities in the nickel space.
That's fascinating. So we can't talk about supply and not mention Indonesia.
Yeah.
Big news. Obviously, I'm going to guess 3-4 weeks ago.
Yeah.
Right. So, and again, this nickel series is going to be for people of all abilities. A lot of people will know about Indonesia some way. So, for the pleasure of people who don't know about it, can you talk about their influence in the marketplace?
Sure.
Okay.
Yeah. So one of the things that's unique to nickel is it's not as widespread, found in many places across the world. There's some specific geological conditions that have to occur for you to have nickel deposits. So as a result, nickel supply is relatively concentrated in a few countries. And Indonesia, particularly the island of Sulawesi and some nearby islands, are basically the Saudi Arabia of nickel resources. There's a substantial nickel resource base that was tapped in the mid-2000s as they mined the ore and shipped it to China to make nickel pig iron. And now what the Chinese producers are doing is basically building stainless steel plants on top of the ore body, because that's the cheapest way to make stainless steel.
Right.
And so we've seen a massive increase in capacity during that time frame, and we will need even more capacity to come. That's one of the only places in the world where there's substantial reserves available to be developed today.
Okay, so but they also made an announcement about how, they halted exports.
Yes,
that's had a big impact.
Yeah,
initially, and so huge shockwaves.
Yeah.
Why did they do that? And what do you think the impact of that's going to be, short term and medium term?
Sure. So they first started banning ore exports back about 4 years ago. And again, the reality is
so what does it say? They've been stopped starting?
Yes.
Right.
Yeah. It's come and gone into the market a few times, which again, one of the reasons why I think it's been nickel's been a difficult metal to invest in is because of some of these dynamics that what's Indonesia going to do, not do, as we move forward. So in 2014-15, they basically put this ban in place because when you look at the price of ore, as a percentage of the contained nickel value versus the price of nickel, when you ship it in ore form, the country's really only capturing 15 or 20% of the value. Right. And so what Indonesia's, a country has a finite amount of resources. They wanted to see as much value add happen in Indonesia. So by putting the ban in place, it was forcing Chinese companies to build their plants in Indonesia as opposed to China. And that plan worked very successfully. Indonesia's seen tens of billions of dollars of investment in capacity, in this area. They then changed their mind and allowed some more exports to continue, partly because the local producers, including a state-run company, PT Antam, was mining to provide high-grade ore to the local Chinese plants, but they were also, you can't just mine the high-grade ore, you have to take some lower grade with it. So they were facing basically mountains of unsold ore that they couldn't do anything with. So Indonesia then allowed exports for a period of time, and this was supposed to continue until 2022. And what the big announcement was this summer was we said we're going to pull that forward. And so it got pulled forward to January 1 of next year, of 2021. And then in the past month or so, there's been talk of banning now, but they've actually now allowed some exports.
This is driven by what? So there's some politics involved here. You talked about Chinese local plants. So I'm assuming Chinese companies building plants in Indonesia. And they must hold some sway because the employment, royalties,
big time,
cash, everything. So it seems to be changing the pattern, the decision making as regularly as they seem to be doing. What's going on there? Do you know what the dynamics are?
Oh, it is. It does really come down to local stakeholders who, who are mining ore and want us to continue to sell ore to China and make money that way. And now you're going to lose that ability, that revenue stream, right? So it comes down to again for just balancing off those local interests versus versus, like you said, some of the larger Chinese companies that
Yeah.
are there, and trying to find that balance. Again, going forward, once the ban is in place, when they banned it the last time, it was a hard, fast rule. There was no leakage.
Yeah.
And by January 1 of this year, they will, it will be, hardly enforced, and we don't expect any leakage going forward because, again, they want to encourage that next wave of investment, in terms of HPal plants as well and stainless steel plants.
Right.
So,
And that's going to come from China?
Yes.
Because HPal, not cheap.
Not cheap. No. You're looking at $30,000 to $35,000 per ton of capacity, that you want at best.
Wow.
At best, the HPAL plants built in other parts of the world have faced massive overruns and have ran up $60,000, $70,000, $80,000, $100,000 per ton of capacity that's in place. So,
and what's that mean as a number? So if you're looking for the capex, what number are you asking me for in a HPAL project typically?
Oh yeah, so if it's a $30,000 ton plant, the best example that's been done is by Sumitomo Metal Mining. They spent about $1.4 billion US.
Okay.
Yeah. So,
okay, these are big capex numbers up front. So very few people can do that.
Yeah.
Not only fund it, but very few people can put that kind of consortium together.
Yes.
So, which interests me because I know we're focusing on Indonesia here at the moment, but they are major players. So if you don't mind. The Chinese influence, so the China building plants locally, funding them, I mean, how have they structured those things? Is it a build and operate type model? I mean, what typically do they do?
Yeah, so it's different between the NPI and stainless and what they're doing with the HPAL. So the NPI and stainless, you have several large producers and some smaller ones in China who are basically taking the same technology that they put in place in China and literally building a carbon copy of that plant in Indonesia. Just
quite efficient?
Cut and paste, yeah. Those you're looking at $10,000 to $20,000 per ton of installed capacity.
Okay.
And again, going now all the way through to making stainless steel in Indonesia. So they have most of them have the expertise in that particular area. When it gets to HPAL, that's hydromet technology.
Yeah.
If you're making stainless steel, there is no hydrometallurgy involved.
Right.
So what we've seen in terms of the plants that are the HPAL plants that are being built in Indonesia today is they're joint ventures between several different Chinese partners. Some of whom bring that hydromet technology, people who bring the resources, right, and then people who are able to bring the scope and scale of their existing business to help deliver some capital in there to build the HPAL plant. So none of them are operational yet, and it's going to be a big TBD to see how quickly they ramp up.
Oh boy!
Relative to some of the other plants that have not done so well. So. Typically HPAL has taken longer and cost more in most instances.
That's really interesting. Well, again, we've talked to a few nickel companies along the way, and I guess they're dropping very casually the HPAL bomb into conversations without necessarily comprehending. I mean, so are there many people in the world who can put a HPAL project together, not just financially but technically?
Oh, I mean, to be honest, Sumitomo Metal Mining, I would say, is the only company that has really done it successfully, that delivered projects that have ramped up relatively quickly, and were delivered close to budget.
So that's important to note.
Yeah.
Because again, all this is for the benefit of retail and high net worth family office investors. So these are little red flags which I'm interested in getting out of this conversation. So Sumitomo, and interesting, noted. With regards to supply, just sticking on the supply side of things, so who are the other influencers? So we've dealt a little bit with Indonesia.
Yeah.
Who are the other players in the market?
Yeah, if you look at basically supply today, you've got a handful of groups that really control the biggest bulk of supply. So again, you've got Indonesian production that we've talked about in terms of NPI and integrated stainless that's there. You have the Chinese nickel pig iron producers that have been taking ore from Indonesia, but will have to get it from the Philippines and a few other countries to continue to produce nickel pig iron in China. You've got the larger integrated historical producers. So Vale with Inco from the past, Glencore with Falconbridge from the past, and then the Russian producer Norilsk.
Yes.
Each of those are sort of large integrated nickel producers. Eramet is a smaller integrated producer and has again been around a long time. And then obviously BHP has their operations in Western Australia. So that large base of sort of integrated multi-asset producers who nickel is just a commodity, one of their commodities.
Right.
Is the other important big chunk of supply.
The thing that those guys all seem to have in common is they're vast. These
Yes.
are big companies with access to finance.
Yeah.
Because nickel's not cheap to put together by the sounds of it.
Yes,
right?
no, it is not. Yeah.
Right. So again, from an investor's point of view, you need to sort of understand, when you're looking at companies, you need to understand where they fit in the mix, fit in the cycle.
Yeah.
Which I think is something we will get to towards the end of this conversation. Yes. But in terms of picking winners, it's good to understand the thesis behind nickel.
Yeah.
And how companies can actually monetize, what they've got. Okay,
Yeah,
so we will get on to that. Okay.
Yeah.
So on the supply side, I guess just as our first conversation, thank you very much. Demand.
Okay.
Okay. So again, comes back to our lovely super cycles.
Yeah.
Okay. So demand at the moment is at what sorts of levels compared to historically as you've seen them?
Yeah. No. Demand has continued to be quite robust. I think that's one of the people underestimate about nickel. So nickel demand has grown at an average of almost 5% a year over the last decade. So for things like copper and zinc, the comparable number would be 2 to 3%.
Right.
And so
what's that been driven by?
Stainless steel growth. So
just stainless steel growth.
That's batteries are just a couple percent of the market today. It's a very small amount. It's going to grow very quickly and to a very large number. But as of that, all of that historical growth has really been driven by stainless steel and to another extent alloys and alloy steels. And the reason it's able to grow, has grown and will continue to grow is stainless steel is a very small fraction of the overall steel market. So stainless steel has a lot of properties in terms of long life, highly recyclable, which are becoming more valuable in today's economy. And so stainless steel continues to steal share from other types of steels. So we don't expect any slowdown in stainless demand growth going forward here.
I'm gonna guess, is that coming out of China as well?
Yes, it's obviously been China has been a massive source of demand growth, but it continues to grow in a lot of other countries.
Right. Yeah. Okay. And so, what are the other kind of demand drivers for nickel at the moment?
The other big one is in terms of high nickel alloys. That's one of the things with China is that it moves up its economic development curve. You start with carbon steels, you move to stainless steels, and then when you get into sort of other sectors of your economy that become more important, you start to use nickel in things like high nickel alloys that are used in jet engines, gas turbines, nuclear power plant alloys. There's another sort of big chunk of about 15 to 20% of nickel demand that goes into those types of applications. And so every time you're sitting on a plane, if you look out a window, there's several tons of nickel in every one of those jet engines. So as tourism becomes a big part of the Chinese economy, and Chinese tourists start to fly everywhere and they're ordering thousands and thousands of planes, that's helping drive nickel demand globally.
Right.
For those airframe manufacturers.
Fascinating. So, I'm going to stick with the supercycle thing because it sounds terrifying and exciting at the same time to me.
Yeah.
So, where do you think we are in relation to the next supercycle? Because we know what the price is today. Great. Where do you think it's going to get to? I've heard lots of very different numbers over the past couple of months from nickel guys.
Yeah.
What's your view?
Yeah, no, I think we've completed leg one.
Okay.
Of what'll be 3 or 4 legs.
Okay.
Up.
Why do you say that?
Well, you need you have a set of conditions that sort of have to unfold over a period of time, to sort of start that.
Go on, then break that down for us.
So
tell us about that.
Yeah. So what set the stage for a super cycle today is and what historically has happened in the past is you end up in periods of underinvestment. So nickel, again to your point of in supply that you've got a lot of large companies. Well, they chose to allocate capital to non-nickel projects over the last decade. So most of the existing production has shrank over the last decade.
Okay.
And a lot of these, the existing mines are deep underground mines, or larger scale processing plants. And so, those are things that you can't, add something in 12 months, be in production. it takes multiple years to do it. So 2 underground projects. So Valley finally approved the Voisey's Bay underground project a couple years ago. But that was announced in 2017, 2018. First nickel is not till 2021, and it doesn't ramp up until 2023.
Interesting.
It's that 5 years before from announcement to full production. Glencore and Sudbury, again, new mine in Sudbury called Onaping Deep. Again, first production won't be for 3 years because they're sinking a several thousand meter shaft, and then it won't ramp up fully for another few years after that.
Oh,
so with that underinvestment, supply can't be flipped on quickly again. So that's sort of starts to set the basis for it, and then there's a demand surge that comes out of nowhere. So in the 60s when we had the big spike, it was Japan that was growing very, very quickly, and there hadn't been a significant there was some underinvestment in nickel, and they couldn't catch up quickly enough. They then overbuilt in the 70s. In the 80s, it was again, you had Korea and Taiwan industrializing. And so that was driving, a significant amount of new growth. And we'd come off 10 or 15 years of low nickel prices, underinvestment, as people were rationalizing capacity that was overbuilt in the early 70s to the response to the big spike in the 60s. And again, in the 2000s, through the 90s, nickel had to absorb the collapse of the Soviet Union. So that was a big nickel producer and consumer, and their consumption of nickel dropped by 80 or 90%. And you had this huge amount of new supply introduced into the market, and a huge amount of scrap that came into the market as basically the Russian economy got torn down and sent as scrap to the West. So again, that time period leading up to the early 2000s had seen a significant underinvestment in nickel capacity, and then China came along and set the spike. So in this case, we're coming off a decade of underinvestment in other capacity outside of Indonesia, and we see now electric vehicles on the horizon and that big lump of demand that's coming from the EV story.
I think it's fascinating because you're seeing these replications of what. So therefore, you say there are patterns for these emerging economies as they grow and get ever more, demanding consumers. So China at the moment is where are they in their phase of development? Because you go to some of the cities and it's hugely sophisticated, but they've got 1.3 billion people. Perhaps don't all live in the cities.
No, and that's it. I think the thing that's important about China is it's not just one country. You've got sort of several different areas that are going through a different stage of industrialization. So the eastern coastal cities are probably very up the curve, right? And then as you move into the west and center of the country, you get less and less behind, less and less developed. So there's other parts of the regions that are moving up the curve, and then China's got its Belt and Road. Where they're extending that infrastructure build out into their neighboring countries, right?
So we were there last year, and we're going into Chengdong and Chengdu and Sichuan, and it's a noticeable difference. But it's coming. So that wave is still there. So they still have a ways to go because there's so much of it. So that the demand side of things for China is still encouraging for nickel suppliers. And that's not just the EV. That's
that 5% demand growth that we've seen in nickel, and have continued to see for long periods of time. We don't see that slowing down anytime soon.
That's fascinating. Okay, and so with regards to when you were at RNC, you had Dumont before. You've got this new venture, which we'll hear about another time. You promised to tell us what's going on there. How do companies, get a sense of where they fit in the mix. So you're looking at these super cycles happening and these growth patterns, and all the numbers point up, the pricing points up, but it takes a while to get into production. It also takes a lot of money. To get into production. So, but before you get anywhere near production, how does a junior company go through a process of establishing itself, given in a world of giants? You mentioned these super huge companies with big balance sheets and access to cash. How does a small company generally get into the market and establish itself?
So one of the opportunities, and this is actually going to be a fundamental shift that's going to happen over the next 3 or 4 years. nickel historically was an oligopoly. Nickel processing, so downstream processing, was an oligopoly, controlled by Inco, Falconbridge, now Vale, Norilsk, Glencore, and so the problem for small miners was you could build your mine, but then you had to sell your concentrate to somebody, and unlike copper and zinc, where there's benchmark terms, they're negotiated very competitively every year. There was some fairly take it or leave it pricing, which transferred a significant amount of the value to the smelter refiner and away from the miner. So mining is hard, but when you end up having to give up a fairly significant share of that value to
just when you've done the refiner, you got it out of the ground. No one will process it unless you pay through the nose.
Exactly.
Wow.
Right. So
okay, got it.
What's now going to be changing in the nickel space? We're not there now, but over the next 2 to 3 years, is the Chinese and every other semi-finished, semi-processed material goes ahead and builds way too much capacity to meet the market demand.
Right.
And then they bid up the price of the feed to basically a break-even number. So with nickel sulfate for EVs, which are again a massive amount of capacity is required in Asia, they will build capacity to take various nickel intermediates and then process them into the products that the EV market is going to need. So it's opening up the door now for smaller sulfide mines to be able to come into production and have competitive pricing for their product in 2, 3, 4 years time. So it will create the opportunity for some smaller producers to more easily come to market. In terms of laterite ore suppliers, again, China is going to need ore supplies. Because Indonesia is now not going to be supplying it. So again, there's not a lot of places where you find laterite ore in coastal deposits that you can ship out of the country, but there are some places.
Can you explain the difference between those different types? Because again, just want to break this down technically for people so they just get it, feel comfortable with the thesis, but also the technical.
The sulfide versus laterite.
Please.
Yes. Okay. So there are two primary types of nickel deposits. So sulfide is what you think of in Sudbury and so forth. And so the issue there is generally the mining is expensive. You have to build a deep open. Now there tend to be deeper underground mines or you are bigger open pit operations processing low grade nickel. Once you make a concentrate, because you upgrade it from say anywhere from 0.3% to 3% nickel up to something that's 10 to 15 or more percent nickel, the processing of it from there is relatively uncomplicated. Smelter, refiner, and it gets done. The tricky part for a laterite project is it's much easier to mine. It's basically this is rock that's been converted to dirt over time, and in that process, the nickel and cobalt get concentrated in the soil. So you literally are just digging dirt, and putting it into So these mines in Indonesia that ship ore to China literally just dig it up, put it on a boat, and away it goes. So that the mining part of it's quite simple and cheap. And the processing, the mineral that's the nickel is in is a complicated mineral. So you have to use a lot of energy, either through electricity to melt it all, and that's how nickel pig iron works. So you take all the soggy dirt, dump it in a furnace, and melt it and make nickel pig iron. Or you have to use energy in the form of acid to break the bonds to liberate the nickel and cobalt. To make HPal, that's what the HPal. Process is, and so again, those are big, complicated, expensive plants to do that. So one's easy to mine, one's harder to mine, one's much easier to process, one's much harder to process.
And while you're sort of explaining a few technical details, there's a lot of talk in the market about class 1 and class 2 nickel. Again, for the audience, can you explain what the difference is and the importance of it?
Yeah, no, that's the thing. There's been a massive amount of airtime, about this particular discussion, and the issue is should be more about how many total nickel units we have. Again, at the end of the day, you can take a sulfide intermediate and you can make a range of products with it. You can make nickel pig iron, ferronickel via the roasting approach that we had at Dumont. You can take that to a smelter to make finished nickel products. And the same thing through laterite source-based material. Again, most of that does go to make NPI today, but there's no reason, there are producers, PT Inco and Aramet, that are produced for a long time that make a product that does go to a that goes to a refinery that gets converted into finished nickel and cobalt products that can be used for the battery sector. So I think it's very important for investors to not get caught up in that particular discussion. Right. And again, I think the Chinese are going to build lots of capacity to process intermediates. Right. Junior mining companies, having processing plants, at a location to make a product. Yeah. And again, that specification, as we go to have more nickel in batteries, that the specification for that sulfate gets stricter and stricter and stricter. And so, are you going to build a sulfate plant and then continue to, improve that plant to be able to make that product? You should just focus on making a high quality intermediate, and then you will have a market to sell that into in the future. Okay, so you're saying class 1, class 2, slight distraction, certainly for investors. Yeah. Because the market will resolve the economics around that. Exactly. Okay. There will be short-term dislocations, so don't say, oh, today the premium's X, but again, nickel sulfate premiums were $2,000 a ton 2 years ago. They're down to zero today. So back to our small company. Yeah. Sorry. I just wanted to segue off there and break that down technically. So the small companies, you think it's going to be easier? Well, it's all relative. Yeah. For junior nickel miners, to actually get into market, be able to not just find it, dig it out of the ground, but actually get it processed in market as a result of what you at a competitive price. Yeah. Well, there's the key. Yeah. It's all got to be economic, right? Yes. We can all mine, take stuff out of the ground, but it's got to be economic. You've got to be able to make money. So you think there's a space for juniors in this market? Do you think mining nickel in the past is advantageous, or do you think nickel is a sort of relatively easy type of commodity to get into? If you've mined gold, you've mined silver, it's all the same, isn't it? Yeah, I mean, generally mining is like it's not. There's specifics to a particular metal that you need to know, but bottom line, the technologies, processes that are used are relative, are similar. So if you've run a copper mine, you should be able to run an underground copper mine. You should be able to run an underground, nickel operation. Okay, because we talked to some CEOs of commodities and they say, well, if you've never mined in this space, you don't know what you don't know. Right. Okay. Yeah. But nickels is like less complicated than others, is that what you're saying? Yeah, I would say it's consistent with the other base metals. There are, again, and each metal does have its specifics. That you do need to know, but again, you can find the expertise and put it into place. Beautiful. Yeah. Right. So I said earlier in the conversation we were going to sort of try and work out how we can spot winners versus people who might struggle. So on a no-names basis, and I don't want to pick any companies out. I just want to understand the profile a little bit, if I may. So there's bulk plays and there's slightly higher grade plays. Okay, and they each have different challenges. Yes. Okay, so bulk for me is, would that be below 1%, or is it below no, it would be below 0.5%. 0.5%. Okay, so that would be described as bulk. I mean, what are the higher grade? Higher grades would be sort of 3 or 4% nickel. You get some massive sulfide nickel, smaller plays in Western Australia, and then you get sort of another sort of bucket, sort of between 1% and 3%, right? That you could mine underground on a larger scale. Okay. Again, the biggest challenge with nickel is there's just not many new nickel discoveries. Right. We have, if you look at the project pipeline of most metals, there's literally hundreds of gold projects. There are dozens and dozens of copper projects. Yeah. In the nickel space, there really are a very limited number of projects, and there's been a very, very limited number of new discoveries. So that's the thing. I think when investors start to look at it, there aren't a big universe of nickel opportunities with which to invest in. So and we have had the pleasure of meeting a few people. With large scale in terms of volume of the resource. But they're all struggling at the moment because the money's just not quite there for them. And some are trying to still work out what they've got on the ground and what the economics could look like. But if you go and talk to institutions or banks or so forth,
what are they feeling about this? But given again the super
Yeah.
cycle component to it, how does a financier put together a package based on what they've seen go on in the past, or does it not matter to them? Because
Yeah, no, I mean, I think the key challenge, and again, talking with my experience at RNC and Dumont, for the first 7 years there, nickel was an out of favor metal. There were concerns over the long term price, and so it was very hard for people to get their head around building a big $1 billion nickel project.
Yeah.
At that point in time. But with the shift over the last 2 years, the thing that's been fascinating with the EV sector is, they want, they would like the nickel now, and they keep asking, like, when can you, how quickly can you double it? Can you double it a second time? They have such massive growth requirements, that discussion is starting to change. And I think one of the things, that's to me is fascinating is you're seeing literally tens of billions of dollars of investment in battery capacity, but they haven't necessarily done that for the metal that they're going to need yet.
Right.
So I think they're going to wake up to that reality soon, that if you're not also building the capacity, provide the raw materials that you're going to need, it's going to make it more challenging to make the battery if you don't have this stuff to make the battery out of. So
I have to say, it's very confusing for investors at the moment, because almost every company that we speak to is pitching the EV revolution, the battery revolution. It's going to change our fortunes, and therefore invest in us, buy our shares, whatever the pitch is. Some are more believable than others. We've had, again, some people sort of talks about the timing of all of these things. So I think we've I can't remember the name of those. A couple of CEOs go, look, the reality is this thing's a couple of years away. So companies between now and a couple of years away, realistically not going to be impacted by the EV revolution or pricing in the market, etc. Or demand in the market at the moment. But what they will say is, like, okay, get in cheap. Our stock is cheap today, so get in ahead of the crowd. But how do you pick winners? What should we be looking for? Just specific to nickel, I mean, what are the sorts of things that we should be avoiding?
Right. I think the things to focus on, are because again, most nickel projects are expensive, right? So Vale's new underground mine in Voisey's Bay is $1.5 billion.
Right.
Glencore's new mine, I think, is $800 million or $1 billion. So most nickel projects are going to require $1 billion or so of capex. To be able to fund that kind of investment, you need large companies to be interested. So I think that's one of the things to look at is is the scale of the resource that this company has got going to be attractive to one of the majors who say, I want to grow in the battery material space, and I can do that through nickel. Again, attracting investment from the EV companies, again, they're not going to fund 62 little mines to come into production. They want larger, long life, large scale assets that can hopefully grow with them as they grow their businesses.
So what is large scale? If you said right, the resource number, mineable resource number is this.
Yeah. So nickel is a 2.4 million ton market. And if you can produce 20 to 30,000 tons a day, that's a decent size mining operation. So roughly kind of 1% of global supply. If you're so I'd say that's one class of investment.
Yeah.
I think the other opportunity again would be smaller scale, that it's going to produce a concentrate,
Right.
And again there I think just make sure that they're using realistic operating cost assumptions and realistic capital cost assumptions in terms of if they're restarting a small scale mine. That's because that's one of the there are some of those opportunities out there today, and some of them are good and are good at a good price. They'll be able to come to market relatively quickly and participate in the cycle as the nickel market rebounds.
Right.
When RNC we did the joint venture with Waterton, the cash pool that we did was to sell down part of Dumont to be able to pick up some of these smaller scale restart opportunities so you could participate in the cycle more quickly.
Okay.
As opposed to having to build a big project for 2 years.
Right.
So I would say it's the world scale asset, the sort of small scale restart or small scale resource that you can bring into production relatively quickly and cheaply. But again, make sure they've got realistic operating capital cost numbers.
Well, just on that,
Yeah.
again, won't name names. But you talked about Sumitomo, you talked about HPal earlier.
Yeah.
If someone's pitching to the market, they can build a HPal operation for less than $1 billion. Are you going to go, that makes sense to me?
I know. Again, there's been one successful person, and that's the cheapest.
Yeah.
They've built multiple plants. They built it in the Philippines, which is a very low cost place to operate.
Yeah.
So if you use that as a benchmark, and then scale it up from there. So if you're in a higher cost country than the Philippines, then that cost should go up.
Yeah.
And they only made an intermediate. They shipped an intermediate product that went to their existing refinery in Japan.
Mm-hmm.
So if someone's going downstream and going to a final product, that should be again another chunk of higher cost. Because some of the less successful plants, if you look at some of the capex numbers, they've ballooned to $7, $8, $9, $10 billion,
right,
before they've started to work even close properly. So
right.
that's the upper end.
So the answer to that is you would be suspicious of someone saying HPal can operate for, if you're spending less than $1 billion, that would be a red flag.
Yes. Yeah. Exactly. Yeah.
Okay. Interesting. Thank you for that.
I would say justify to me why you think you can build it better than Sumitomo Metal Mining.
True.
Yeah.
Okay. So most again, so back to the small companies. So most you are going to have to find strategic investors.
Yeah.
With the balance sheet to be able to raise the money to be able to invest in a nickel project. How should companies structure those relationships? Obviously, you don't necessarily want to come in at pubco.
Yeah.
Because there's going to be nothing left of the company.
Right.
Okay, because there's so much money. So they come in at asset level typically. And what do those sorts of relationships look like? I know you did the Waterton deal, but that's much earlier.
Yeah. No. I mean, I think again, the nickel projects that will get advanced this cycle, you see are similar deals to what you saw in the copper space. So you have an Asian, either off taker or a strategic. Who wants access to that material, and it's they come in on a joint venture basis. They provide a big chunk of the equity capital that's required, and then build and provide the balance of the financing, to get that in place.
Right.
Again, we just haven't seen it in nickel, but it will be coming.
Mark, thanks very much for your time today. Really enjoyed that. I learned a lot, and I always like learning a lot, and I hope everyone else does too. We're going to talk about your Canada Nickel company. Maybe when you're back in Canada.
Yep, we've got more news coming, so after that would make sense.
Yeah, look forward to hearing about that. But thank you very much for helping us learn a little bit more about the nickel market. If we can talk to you again at some future date with some questions which do come in from a lot of the viewers and subscribers and followers. If you don't mind.
Oh no, very much glad to do it. Again, I think this is a metal that people haven't had a chance to invest in very many ways. So, the more educated investors are, the better decisions are going to make.
Thanks very much for watching. We hope you enjoyed that. And if you did, please click the button in the corner of the screen to subscribe to our YouTube channel. You can also catch us on our website, cruxinvestor.com, and Cruxcast, our podcast series. Plus, most days you can catch us on LinkedIn and Twitter. We'd love getting your feedback, so please keep that coming, and we'll speak to you again soon.